So good to have you join us today. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. Let's get started with a glimpse of today's highlights. With less than a week left until the April general elections, what are political parties putting out as their welfare pledges in the face of a rapidly aging society? We sit down with an expert to talk about China's new economic goals and how it plans to realize them as it looks to prop up its slowing economy. These stories and more coming right up. It was an earnings surprise for Samsung Electronics. The Korean tech giant released estimates for its first quarter performance, saying it posted stronger than expected earnings in the first 3 months of this year, thanks to bumper sales of its new smartphone models. Our Kim Min-ji starts us off.
Samsung Electronics has posted better than expected earnings in the first quarter of this year. According to the company's earnings guidance, operating profits stood at roughly $5.7 billion during the January to March period, up more than 10% from a year ago. Sales edged up almost 4% on year to over $42 billion. The operating profit estimate beats a recent market consensus of about $4.8 billion. Analysts attribute the surprise earnings to the release of Samsung's new flagship smartphone models.
Sales of the Galaxy S7 were much better than market expectations. Also, sales of Samsung's premium chips are expected to have offset the losses of falling chip prices.
On top of that, Samsung is believed to have benefited from favorable foreign currency conditions. A relatively strong greenback allow for greater profits as transactions of components are made using the dollar, while for finished goods, it means products gain price competitiveness in overseas markets. The company will release its finalized earnings later this month. If the results are in line with its estimates, it will mark a turnaround in earnings for the tech giant's mobile division, which had been weighed down by stiff competition from Apple and up-and-coming Chinese rivals. For the second quarter, analysts expect Samsung to stay on track for recovery on the back of seasonal demand, as well as more orders for IT devices in overseas markets, which will likely cancel out marketing costs from its mobile arm. Kim Min-ji, Business Daily.
We're unlikely to see the U.S. Fed Reserve raise its interest rates this month, as several Fed officials remain cautious about a further rate hike amid slowing global economic growth. Fed minutes from its March meeting released on Wednesday showed that policymakers generally believe that uncertainties in the global economy will continue to pose risks, suggesting that an April rate hike might be too early. The minutes, however, indicated that some officials actually did want to raise rates in April if the incoming economic data met their expectations for moderate growth. Last week, Fed Chair Janet Yellen said the central bank will proceed cautiously in adjusting policy given the risks to the outlook. The Fed's next meeting will be held on the 26th and 27th. It's been less than a week since the so-called Panama Papers were leaked, exposing how the rich and powerful hide their money with millions of records on offshore entities. And a Korean industry tracker has revealed that billions of dollars from tax havens have made their way into the Korean stock market. Our Eunice Kim tells us more.
More than $2.3 billion US. That's the amount that flowed into Korea's equity market from major tax havens around the world. Based on Tuesday's market close, industry tracker jeonse.com found the amount of tax haven capital accounts for more than 6% of all foreign investment in the Korean market. And where did the money come from? Most of it, or more than $870 million, was tracked to the Virgin Islands, followed by Bermuda, the Cayman Islands, and Switzerland. But that's only half the picture. If suspected tax havens such as Singapore, Hong Kong, the Netherlands, and Ireland are included, the amount of capital from offshore havens is an estimated $13 billion. Some analysts say that Korean nationals are among these foreign investors who set up offshore shell companies to keep their assets under wraps. This comes amid the Panama Papers scandal, which leaked millions of records on offshore accounts. Korea's Financial Supervisory Service has vowed to investigate the 195 Koreans on the list to see if they violated the Foreign Exchange Transaction Act. Eunice Kim, Business Daily.
And it's the final edition of our special three-part series on political party pledges to boost the domestic economy. So today, our Lee Joo-young takes a look at what parties have to say about improving the country's welfare.
The lack of affordable lump sum deposit jeonse homes, a rock-bottom birth rate, and a rapidly aging society. Facing some of these chronic issues, Korea's political parties have been offering up a wide spectrum of solutions ahead of the general elections in response to growing demands for stronger social protection. The ruling Saenuri Party has vowed to supply up to 140,000 homes for university students and young workers at 20 to 40% cheaper than market price. It has also pledged to provide 53,000 two-bedroom units for newlyweds. For elderly voters, projected to be the most influential voting bloc due to its size and turnout, Saenuri said it will establish more senior centers around the nation and reduce the burden of medical bills. Winning over older voters is also high on the agenda of the main opposition Minju Party of Korea, saying it will hand out roughly $260 a month in pension to seniors in the lower 70% income bracket. It has also vowed to have the government shoulder 100% of childcare costs, as well as extending paternity leave from 5 days to 30, offering paid leave for 20 of those days. The offshoot opposition People's Party has pledged policies to push up the birth rate by increasing maternity leave to 120 days from 90 and raising childcare subsidies from 40 to 50% of people's wages. It has also offered to strengthen the government's role in fiscal support of the Nuri curriculum, a standardized education program for children aged 3 to 5. But despite these rosy promises, the big question is, how do parties plan to finance these costly social welfare programs? With the finance ministry saying such pledges may cost the nation an additional $302 billion over the next 5 years, experts take note of the fact that one too many ambitious campaign promises in the past have been shot down in practice due to a lack of funds. They add, pushing up the welfare budget will be particularly more challenging, as preserving the country's fiscal soundness will also weigh heavily on the minds of policymakers. Lee Joo-young, Business Daily.
Over the years, China's economic growth has become an important source of global demand and expansion. So it's no surprise that all eyes are on what China is up to next, especially after its growth rate fell below the 7% level last year for the first time in a quarter century. And to tell us more about where China's economy is headed and what kind of reforms we can expect out of the world's second largest economy, we have with us Yong Kwak-ping, Chief Executive Officer of China's Inventis Investment Holdings. Thank you so much for joining us today.
Thank you for having me.
All right, so earlier this month, the Chinese government announced a new normal for its economy. Now, what stands out the most from these standards from its economic new normal?
Maybe I have to explain a little bit what is new normal for China. Of course, it's not a new term coined by Chinese government. It was used by the U.S. economy and the U.S. government as well. The new normal basically is to make sure the Chinese economy going forward focusing on quality growth rather than quantity.
All right.
And the Chinese economy is certainly going for innovation, creativity, rather than too much of manufacturing based.
Now, this is good news, but then there are still lingering concerns over China's slowing growth, considering that its exponential growth era has come to an end. So what's your assessment of the current Chinese economy?
That's quite interesting. We talk about slowing growth. We are talking about from 7.5 to 7 and to 6.5. Thinking about the size of the Chinese economy, if we are talking about 6.5 growth, that's a huge growth.
So relatively, it's
Yes,
a huge growth.
yes.
All right. Well, now China has been putting a lot of emphasis on structural reforms, like you said. But tell us more about these reforms, and do you think they'll be effective enough to bring Chinese economy back on its feet?
Maybe we can think back about 20 years ago when Chinese economy opened up. That was also a reform. And that reform made Chinese government spend a lot of money on hard infrastructure building. But 20 years later, the Chinese government may be thinking about softer infrastructure. I give you an example. Instead of building too many roads or focusing on building roads, railway, the Chinese government would think about more on hospital, building more hospital, building more schools, and to improve the life of the Chinese citizens.
And going from that, China is also looking to, I guess, reform the service sector as well as
Yes.
promote advanced technology
Yes.
and also implement changes in its industrial structure, right? Can
Yes,
you tell us
that's
more
right.
about that?
What has been happening last 20 years, again, of too much investment or focusing on manufacturing or infrastructure growth, and the price they have to pay is, in fact, as we all know, the problem in environmental, the problems in kind of lack of creativities and innovations. The Chinese government would really want to address this point. So the reform, again, as I mentioned, will try to focus more on creativities and innovation nowadays. And the other one, very important, is when they have all the infrastructure set up, the Chinese government would want their people to enjoy a better quality life. So they are thinking about, hey, we should let them spend more money rather than save too much money. So it's going to be a consumption-based kind of economy going forward.
Now, noting from that also is the part of these structural reforms is that the country's desire, China's desire to, I guess, shift from an export-led economy to one based on growth and consumption,
Yes,
right?
that's
Can you
right.
tell us more about that?
I think the Chinese government is trying to balance export and import. For example, in the past, Chinese export certain energy resources. Nowadays, Chinese have to import energy, I mean oil, but in particular, or gas. They have to do that because the consumption within Chinese economy is just simply not enough. So they will do a lot of import as well. And the export base, as recently the Premier has mentioned, the Chinese government would not devalue their currency too much to stimulate export. So what they need to do, in fact, again, is try to shift the focus on cheap quality product to a better quality product.
All
So
right.
that you go into the world economy to compete and then to sell better quality product, and so that you can actually maintain your export rather than just keep on doing all the cheap quality product.
Now, there are worries, though, that here in Korea, that if China makes that shift to a growth model based on consumption, then there would be increased competition between Korean and Chinese products.
I'm always an optimist. In order for Chinese to move along the area and improve the product quality, they need a few years. It won't suddenly change overnight. So the so-called the threat to Korean export would not be felt recently.
Immediately.
But,
All right.
but Korean would also need to catch up. That means if China is moving towards higher quality product export, Korean would also move towards a better quality services and product as well. So I think Korean economy is not going to stand still. We'll be catching up together, moving together with Chinese economy.
So you're saying increased competition is good for both sides.
I would say so, yes.
All right. Well, obviously, global investors have their eyes on China with new goals and new growth model and now the economic new normal. So what are some things that investors should keep their eyes on when they think about investing in China?
That's a good question. As I mentioned, the so-called new normal is moving towards the better quality of life. So as Chinese, maybe you will understand that we always talk about 衣食住行. That means better clothing, better housing, looks better, and better transportation, and better grooming. And that would give Korean a very good opportunity to work with Chinese company or the Korean grow their product locally and then later on move into the Chinese market.
So it'll provide more opportunities
Yes,
for Korean
definitely,
companies as
definitely.
well.
And Korean certainly has an advantage in cosmetic, fashion,
Right, with the
media,
K-boom, right?
yes, media, movies. So these are all the Korean advantage.
All right.
And Korean should export all this to China.
And it is
Yes.
doing so, but
And you need to do more, yes.
All right,
Yes.
thank you so much for your insight today.
Sure, sure.
And that wraps it up for today, but we'll be back tomorrow at the same time, same place for your Business Daily. So don't forget to tune in then. Thanks for watching, and goodbye.